So I pulled up here, here's the chart of Matterport. It SPAC'd last summer with one of the Gores holding companies. Again, it was trading roughly about $12, $13 when it SPAC'd out over the summer. And then it really had a big spike in November timeframe, probably mid to late November, right before Omicron. Omicron hit, it basically turned down at the downside, which most growth equity stocks are the exact same thing. There's nothing unusual there. Really thing to look at here is you notice the volume bars. Really looking at January, February, and mid-February. I mean, it's just massive volumes coming in. They really kind of pushed the stock down. A lot of selling pressure overall. And we'll explain kind of what happened in the January, February timeline, what drove that selling pressure, and kind of why it's at where it's at right now, and where it could go in the future. So this is their last 10K, last annual statement, and pulling up here. So this you see roughly revenue rate of roughly $111 million. I mean, pretty steady growth for 2020. For 2022, expecting about 125 to 135. So not massive growth. Most of that's going to be from sub-revenue growth, which, it might be going like 30, 40% at the high case potentially. License revenue and service revenue is not that big. I mean, service revenue is growing, but it's not just a big baseline overall. And also look at product revenue. It's actually down year over year, which they're trying to go from more from product side to the service side, as well as right now supply chain issues with actual cameras and everything else too. They're going to hit by supply chain, just basically inventory outages across the board. So that's really, if they're going to grow, it's going to be from the sub side over here. So on the cost of revenue side, really the two things to point out here is looking at the actual sub cost of revenue. So $61,000 of revenue at $14,000 or $14 million of cost. I mean, that's a massive profit margin. License revenue is 100% profit. So even though this is a small number, $4.7 million dollars, I mean, it's straight profit across the board. So any kind of growth there, it goes straight to the bottom line, which is fantastic for Matterport. So I pull up here, this is their balance sheet. I mean, you see roughly total current assets about $430 million. So pretty healthy. They're doing all right, at least from a cash perspective right now, based on their cash burn rate. I mean, they might need to raise cash next year potentially, go into debt, but we'll see about that. Current liabilities, again, it's very, very small. You're talking $33 million, which again, is not that big of a deal. The big thing is notice here is long-term debt is zero, which again, after the reverse merger, basically last summer with the Gores holding for the SPAC, I mean, they basically wiped out their debt, which is fantastic for them. But the big liability, the big question mark here is contingent earnout liability, which all that means is almost like stock options or stock RSUs. Basically, it's like, hey, if the management does well, we'll pay them out in stock, which that's a form of dilution for the stock, which is a liability for the company itself, which is a massive number. I mean, $377 million. I mean, look at the actual total liabilities, $450 million. I mean, that's over 80% of their total liabilities is actually this earnout liability, which if that went away, their liabilities would drop, I mean, dramatically, obviously. And so, I mean, as liabilities drop, the equity should rise with it too, but there will be dilution, though, for the actual existing shareholders, which is kind of the big fear that you have overall. So this is the actual buried in their 10K. It's the earnout arrangement as part of the actual earnout kind of documentation. So basically all it is basically incentive for after the post-merger, keep the business growing, make sure you're still growing the stock price, etc. And what this basically represents here is 23 million shares of basically dilution all across the board for basically legacy Matterport shareholders or Matterport basically executives, etc. These are really RSUs, and again, restricted stock units. These are earnout awards. But the big thing to notice here is earnout triggering events were achieved on January 18, 2022, with the shares issued on February 1st, which is why you see that massive spike basically in the earnout shares. So basically what happens is roughly 10%, 15% dilution that came on immediately. And there was probably strong selling pressure, which drove the stock price even further down in the February and March timeframe, which we've seen in the last few months, along with the actual growth equity stocks really just declining across the board for most of the spring and into the, we'll see early summer potentially too. So this is more documentation on the earnout, or basically the earnout awards across the board. So again, 23.4 million shares. It's really divided into 6 tranches of 3.9 million shares. And what that means is if the share price is equal to the volume-weighted average price of Matterport Class A stock for a period of at least 10 days out of 30 consecutive trading days on the ending trading day, that tranche is exercised. So what those tranches are, if the share price exceeds 13, 15, 50, 18, 20, 50, 23, 25, 50. And really the idea here is like, hey, some are easy, like $13 is pretty easy to hit. The 25, 50 is a long-term goal to hit. And really the idea is incentivize management, hey, continue working hard, driving value to shareholders, growing the company. And if you basically do that for, 10 days out of 30 days or 30 trading days, basically you get an extra share, a share grant, basically in your earnout, basically a share bonus. Which again, this current stock price in December 31st, 2021 was $20. So what's crazy though is it spiked up just enough in the November-December timeframe to earn this 25.50 award, which is crazy fast for earnouts. To get earnouts, you're talking like, hey, some short-term ones, a couple months, long-term ones might be a year plus, 2 years, 3 years down the road if the company does well. But as you go back to the actual the graph here, I mean, this graph 25.50, you're sitting roughly around this mid-November timeframe when it spiked up there for almost 2 weeks exactly. I mean, if it had been a little bit shorter, even a week shorter, this earnout would not have been met. It had been too short across the board. But I mean, it's kind of weird in a way, I would say, where this earnout period actually just went up just enough to vest, and then once it actually vested, it crashed down once it actually got earned in January, February, time frame. Which again, it's I'm not saying it's nefarious. It's just a little bit odd in my opinion. Basically, the timing of it and the way it happened. Now it happened so fast after the actual reverse merger of the SPAC itself. Hey, I want to do a quick synopsis of the warrants outstanding. So about 2/3 are basically already been redeemed, so those are already into the share price themselves. There's a couple million outstanding, which it's an 11.50 strike price basically. So basically, as long as the price is below that, it won't matter at all because no one's going to exercise for a higher price than you get on the fair market value, etc. But as it rises, I mean, these might be redeemed though, but it's only a couple million shares. So we're talking about like dilution from warrants. It's going to be very, very, very small across the board. So it's not a major risk factor for a Matterport shareholder. So there's also a couple legal proceedings I think are pretty interesting across the board. So this is the first one. Basically, the former CEO of Matterport is a compensation lawsuit saying, hey, like he basically left pre-SPAC, basically saying, hey, I wasn't paid enough, or my stock didn't vest properly with the actual SPAC merger, so I want to get paid either in cash or in stock, etc. Which again, he might have a point here. This is one thing where it's just a matter of paycheck, how much they're going to have to pay him, and it could be several $1,000,000 potentially. But that's, expedited trial happened December 1st through 2nd, 2021. He actually, they actually didn't rule on this actual matter of the transfer of basically like the reverse merger, stock options, etc. So this might be a paycheck potentially. There, Matterport's filed an appeal on this one. Well, I think an interesting one right here is really the Redfin one. So the former Redfin co-founder, doing business at Sherfield. Basically, what happens is he had 3D technology. They were looking at in 2015-ish or 2016 timeframe. Matterport and Redfin really weren't aligned until really COVID timeframe. So they're actually pretty much on the same page right now. And Matterport's not suing Redfin. This is not a joint, basically IP issue between Redfin and Matterport. It's really from the Redfin co-founder versus Redfin. So if a litigation and liability is going to actually happen, it's probably the Redfin side, which, again, this could be a couple $1,000,000 potentially, or in Redfin stock, etc. But Matterport itself should be all right. This actually goes to trial next month. So you might see actual a Redfin, Matterport actual, kind of in the news media, some of the trial details as it comes out, etc. Now, I think an interesting point down here is actually the SEC basically enforcement. So Division of Enforcement of the SEC, basically, they sent a voluntary request for information for Matterport. So I guess what happens is they sold securities and rebought securities at some point, probably in 2020, because the letter came in 2021. But it could be even much earlier than that, though, too. Which, I mean, this might be accounting shenanigans where they maybe, change their assets around, change liabilities around potentially to basically, look healthier on the books than they actually are pre-SPAC. But again, this is not anything set in stone. They haven't heard anything back since that time frame. It's been, 15 months now or so. So again, but the SEC moves very slowly. But if it happens, I mean, it could become like a hammer potentially if it's something very, very nefarious, which I don't think it is. I think worst case scenario, this might be a couple $1,000,000 fine potentially, and they move on with their lives. But then again, the SEC, I mean, you never know. Then it could be very, very bad. It could be some bad for either individuals or shareholders overall. So that's really all the bad news. I mean, the good news side, looking at the actual valuation itself. So right now it's trading about 10 times enterprise value versus sales. For a medium growth company right now, which you're talking about like 15-20% year-over-year growth. I mean, it's not a high growth company at all. So really, I'm saying medium growth. Probably about 3 to 5x EV over sales. So probably looking at about $800-900 million basically market cap potential right now, which right now is trading at like $1.8 billion. So I mean, there's definitely room to drop there too. But you gotta remember the floor itself is like the data platform it actually has, the assets under management it has basically for all these various 3D scans of houses, commercial properties, etc. I mean, that data is very, very, very valuable. And I'm really seeing the actual basically AWS side with IoT devices, kind of the AWS digital twins plays are going on. I mean, this is an acquisition target potentially if it drops that low. And that's really the big fear I think short sellers have is, hey, if it drops sub $1 billion, but all of a sudden potentially AWS comes in and says, hey, we'll buy the entire, not even the company itself, just the data rights for some of this IP that Matterport has across the board, because that's really is its moat right now. Is it's like another a competitor cannot come in and all of a sudden have 7 million scans of 3D homes, commercial properties, etc. It takes time to actually build that kind of reservoir itself, especially the new BIM files it has. So if you're talking like AR, VR stuff with Meta or AWS or anybody else or even Microsoft out there, I mean, this is very, very, very valuable. So that's why I really see kind of the future Matterport might be taking this data, packaging it, or an AI model, licensing it out even further than it already has, which again, that requires no cost, that's no money. It's really companies like Meta coming in, APIing in the data feeds themselves there, and then from there paying Matterport a check, which is almost pure profit for them if it actually goes well. So also beyond the real estate insurance plays, where I mean, there's all kinds of videos about that I think already been done already. Also too is digital tourism, which is a whole new industry, which I mean doesn't even exist right now. But imagine you'll say you want to go see the Louvre in Paris, and I want to go see it, but I don't want to fly to Paris because hey, it's expensive, couple $100 flight, hotels, etc. Costs a lot of money. I mean, what if you could have a high fidelity digital twin where all of a sudden you have a Louvre in a three-dimensional environment, you put on your AR, VR, or probably VR glasses at this point, and you pay, hey, let's say $4, $4 or $5 charge for basically a 24-hour access, almost like renting the Louvre for a day, and you'd be able to walk around, look at high fidelity paintings, see all the architecture, all the structures, everything else. I mean, basically have the entire building to yourself, and you can walk around on your own pace, kind of see what's going on across the scenes. That's really something Matterport kits provide. That's something even like a Meta too. So let's say, hey, pay that $5, and Matterport might get a 3% commission, Meta might get a 3% commission, etc., if not more. And then from there, I mean, it's only pennies per use or per user, but it's one of those things where like as it scales and as it grows, I mean, this could be a massive revenue stream. That's why I think Matterport in 2025, 2026, if they're successful, I mean, the revenue streams will be totally different than they are today. I mean, they'll still have their actual subscriber revenue streams, but I mean, there'll be a whole new revenue streams from both his collaborations with like AWS or Meta or even Google Maps, etc. Like imagine Google Maps. Imagine if you're in like an urban center, Google Maps, you can like street view, you kind of like what the actual building looks like. And they might ask you like, hey, do you want to go inside the building? Do you want to explore the building? Do you want to explore this mall internally? And you'll be able to walk around inside that mall, basically at will and kind of see what's going on, what stores they have, what the actual layout looks like, what architecture looks like, etc. I mean, this is very, very valuable. The problem is right now, I think Wall Street, they don't understand necessarily how to really value this because these revenue streams are all hypothetical, and it's down the road. It's one of those things where if it ramps up very, very fast, or if it doesn't, I mean, this company might just bleed cash for years and years and years. Because really, the profitability path is not that clear right now. That's really what Wall Street sees right now. That's really what I see too potentially. So I'm near term bearish on this company, but long term, I mean, the upside is very, very dramatic. Hey, but that's Matterport. If you like the video overall, hit the like button down below. Be sure to sub to the channel down below as well too. And yeah, that's the exchange.